Hello friends and welcome back to the channel. I hope you all are doing fine. So friends, today we'll be talking about the Baroda Gyan Education Loan Scheme offered by Bank of Baroda. So this education loan scheme has no processing charges, there's no margin on loans up to 4 lakhs and you get a free debit card along with this. So let's get straight into it and know more about this education loan scheme. So as you can see friends, you can just type in Google Bank of Baroda education loan, and the very first link that shows up, you can click on it and you would be redirected to this page. So once you scroll over to Baroda Gyan, you can click on know more over here, right? So what is this loan for? So this student loan is being offered for pursuing graduation, post graduation, or any other professional courses in India, and in order to avail this loan you should have secured an admission in that particular course in a college or a university. The key benefits being there are no processing charges and there is no margin required for loans up to 4 lakhs. Coming over to the eligibility part, we can see that the courses eligible are graduation courses, BA, BCom, BSc, etc. This is one very big advantage or one benefit that Bank of Baroda is providing, because if you go to some other banks like similar public sector banks, usually they do not finance such non-technical courses, but then here you are getting financed for BA, BCom and BSc courses as well, so that is really good. And for post graduation courses you have your masters and PhD. There's no mention about diploma, postgraduate diploma courses that might be under some other scheme. Well, we can see that later. Then professional courses like engineering, medical, agriculture, veterinary, law, dental management, architecture, computer, etc. So in management, what they have included are hotel management, hospitality, event, mass communication, etc. that are offered by reputed institutions and having assured employment prospects. So friends, in a way this might be up to the discretion of the branch whether to sanction a loan for such management courses that are mentioned over here, because if the bank feels that the career prospect is not really good after passing out or after completing course from a particular college, it might be difficult to secure a loan for that particular course. So you may want to just get in touch with the nearest branch and get more details on that. Then computer certificate courses of reputed institutes are also financed. Then to Department of Electronics or institutes affiliated to an approved university, you can get finance for courses like ICWA, Chartered Accountancy, Chartered Financial Accountant, Analyst, and all these courses. Then courses conducted by premier institutes like IIM, IIT, ISC, XLRI, NIFT, etc. Then you have yes, coverage for regular degree and diploma courses like we had discussed above. There's you get finance for diploma course as well, which include aeronautical pilot training, shipping, etc., approved by Director General of Civil Aviation or Shipping, or whatever the respective ministry would be. Now courses offered in India by reputed foreign universities are also being financed by the bank. All other all other scheme or universities that are covered, you can just go through this once. So we can move on to the student eligibility part. What is the eligibility for availing Bank of Baroda or Baroda Gyan loan, right? So first of all, the student should be a resident Indian and you should have secured admission in any of the recognized institution for approved courses, and those courses should be approved by UGC, by the government, or by the AICTE through entrance test or merit based selection process after your completion of HSC. So management quota seats are not being financed by banks, so you should have secured your admission to the course via some written examination or through some other competitive selection process, right? I hope that is clear. Now, for selection process as well, they have listed out some criteria over here. So what they're saying is, where the selection process is not purely based on marks obtained in qualifying examination, and the same is not the criterion for admission. That means they may not be financing a course where you're getting admission basis your HSC marks only. Okay, there has to be a separate entrance test for that, right? And the sanctioning authority to adopt appropriate criteria based on employability and reputation of the institution concerned. So friends, this again, like I had mentioned in somewhere above, that the discretion lies with the branch where you're applying. So if they feel that maybe the career prospects after completing that course is not very bright, or you may not be able to secure a good employment post completing the course, getting that course financed would be a bit difficult, right? And finally, a meritorious student who qualifies for seat under merit quota will also be eligible for loan under the scheme, even if the student chooses to pursue a course under management quota, right? So if you have secured a seat under merit quota, I mean you have scored marks above the cutoff, and but you are choosing to pursue the course under management quota, only in that case you can get a finance. So friends, the interest and charges for this loan is given as base rate, repo rate linked rate, I believe, BRLLR plus 2%, and simple interest would be charged at monthly rest during the repayment holiday or moratorium period, that is during the tenure of your course, whether it is 3 years or 4 years, and maybe 6 months or 1 year after completion of your course, or you getting a job, whichever is earlier. Simple interest on the entire amount which has been disbursed by the bank would be charged. Okay, now here they have listed down certain institutions. For list AA institutions, they would be charging on BRLLR, and as and when like the reputation of the institute just goes down a little bit, your interest rate would be increasing accordingly. Okay, so you can have a look through this, and I can also prepare a separate video on this. If you want, you can just let me know in the comment section. Similarly, 0.5% concession is given for girl child, and this is not applicable for premier institutions like IITs, IIMs, or XLRI, institutions like that. And penal interest at the rate of 2% per annum on overdue amount on the loan amount which exceeding rupees 4 lakhs. That means if you default in a repayment of interest or the EMI, then an interest rate of 2% per annum on the overdue amount would be charged by the banks. Okay, and there is an additional risk premium of 0.05% over the above rates, which would be applicable for customers who are not obtaining credit life insurance. So mostly banks would like to bundle a life insurance product with the loan that they are sanctioning to you, just to be on the safer side, and so that they can secure their loan. So in the event that when you are not able to pay up, or maybe if something happens to you, the insurance company would be taking care of the liability, or they would be repaying back the loan to the bank. So if in case you are not opting for that insurance, then you would have to pay an additional risk premium of 0.05% over the interest rate that is mentioned over here, right? You can see on your screens. This is list A, B, or whatever category your college is falling into. You would have to pay an extra 0.05% over this rate if you do not opt for the credit life insurance, right? I hope that has made some things clear for you, and if you like this video, or if it has helped you in any way, then please do consider liking this video and subscribe to my channel. So with this, I would like to end the video. Thank you for your time, and thank you for engaging with me. Jai Hind.